Good morning, good afternoon, good evening to everyone. Dear students, let us start AFM, Advanced Financial Management. This is Sir Abil Ahmed from Abil School of Accountancy, your AFM teacher. Okay. AFM, Advanced Financial Management. Let me first discuss the paper pattern, and then I'm going to discuss the entire syllabus. I'll give you the really good idea of the syllabus. Third, I'll also let you know what will be my way of teaching. And to be very honest, I can give you one thing, guarantee over one thing. If you watch all of my lectures properly, you will not fail. I make sure none of you fail. Don't worry. AFM, Advanced Financial Management. Let us discuss paper pattern. The paper pattern is simple. Section A, we have only one question, 50 marks. In section A, we have only one question which gives you 50 marks. But a very important point, how do they ask 50 marks question? That is very important. Number one, you should be mentally prepared that calculation area in this question 1. For example, in part A, or maybe all with part B altogether, you should be mentally prepared that calculation part in question 1, calculation part will be approximately from 18 to 20 marks. That will be a calculation area. Then you have to write a report as well. And report also goes from, you can say, from 22 to 20 marks. And third thing which they have introduced from September 22 onwards, that is, you will be getting professional marks. And now you will be having professional marks in question 110. So actually, in section A, there will be one question, but obviously that one question is going to have number of parts. It could be A, B, C, D like this. But a very important point, if I break question 1 into 3 big chunks. So one is a calculation part, roughly 18 to 20 marks. Second, go for report, 22 to 20 marks. Because if the calculation part is for 18, then definitely report is going to be 22 marks. If calculation part is 20, then report is going to be again obviously 20. But in addition to that, you will be getting 10 professional marks. How do we get 10 professional marks in section A? Throughout the course, when we'll be discussing question 1 of the section A, I will be explaining you people that how do we get 10 professional marks. Obviously this, if you can manage to get 8 out of these 10 professional marks, then obviously passing of AFM becomes very easy. Okay, let's go to section B. In section B, we'll be having question 2 and question 3, each worth 25 marks. Each will be having 25 marks, and not only 25 marks. In addition to that, let me break up these questions. Like question 2, if question 2 part A is having around, let's say, you can say from 15 till you can say 14 calculation area, then we'll be getting in part B 5 till 6 marks for the theory. In addition to that, you will be having professional marks 5. Professional marks. So same applies on question 3 as well. Same. You will be getting in question 3 5 professional marks as well. So from September 22 onwards, what ACC has done, they have introduced 20 professional marks in AFM paper, which I strongly believe will increase the passing percentage significantly, provided that students, they know very well how to get these professional marks. So actually in section A, you'll be getting 10 professional marks, and section B also gives you 10 professional marks. So altogether 20 professional marks from September 22 onwards. Now let me explain you the syllabus of AFM. I'll be explaining the syllabus of AFM in a sequence which I am going to follow in my videos. Number one topic which we will be studying is cost of capital. Cost of capital. That is, we call it WACC also, weighted average cost of capital. Let me tell you one thing. Whatever topic I'm going to teach you, every topic I teach from scratch, from zero. I always assume that students do not carry any previous knowledge. I will never say in any of my lectures that XYZ things you have already studied in F9 basic financial management. So let us start from upper part of that F9. We won't do that. Don't worry. Whatever I'm going to teach, I teach from zero, from scratch. I always assume students, they do not carry any previous knowledge. So this thing should take you to the comfort zone. So you should not be worried about that. Directly, I will not be studying AFM. So in cost of capital, again, obviously, we'll be starting from the basic of the cost of capital, like what do you mean by cost of capital? What is the objective of cost of capital? And there are other many things also. The basic difference in financial management F9 and AFM is, in F9 normally what happens when we discuss how do we calculate risk adjusted WACC in case of diversification, in F9 we stop over there. But in AFM, it is also very much possible that business is already diversified. Then how do we calculate WACC of a diversified business? But nothing to worry. We will obviously start from zero. But cost of capital is one of those topics which are very, very important. Second, after cost of capital, we will start, inshallah, investment appraisal. Dear students, in investment appraisal in AFM, you have 9 topics. So obviously when we'll be starting investment appraisal, I'm going to write all the names of 9 topics. All the 9 topics you are going to study in investment appraisal. After doing investment appraisal, we will go for BSOP, Black-Scholes option pricing model. BSOP, Black-Scholes option pricing model. BSOP is a very new topic for everyone, obviously, because we do not have anything relating to BSOP in part 2 of ACCA. Actually, in BSOP, Black-Scholes option pricing model, we will study how do we calculate value of the share option. And let me tell you one more thing. BSOP, actually Black-Scholes and Merton, they invented this BSOP model, and on the invention of, you can say on the development of this BSOP model, they got Nobel Prize. So it's a really strong, good model, very easy. Just for BSOP, students, they need to have only one skill, and the name of that skill is Excel. So obviously we'll be discussing the entire BSOP Black-Scholes option pricing model on Excel. So it is very, very easy. If you have a little bit even command on Excel, so BSOP will never disturb you. So BSOP is an Excel exercise, that's it. After BSOP, we'll go for Forex, foreign exchange. We'll go for Forex. In this risk management, we will be studying currency risk as well as interest rate risk. After this Forex, we go for business valuation. extremely important area, business valuation. Because if I talk about section A, in which 50 marks question comes, most of the time that 50 marks question is going to be either on investment appraisal. The second topic which has been examined in section A most of the time is business valuation. So in section A, question 1, either you will be having investment appraisal or business valuation. That is, I'm telling you on the basis of the past papers. Most of the time we have seen these two topics in section A, but obviously other topics do come in section A as well. But frequency of these two questions coming in these two areas of the syllabus coming in question 1 is more as compared to other syllabus areas. After business valuation, we will be discussing corporate restructuring. Corporate restructuring. After that corporate restructuring, we go for dividend policy. And let me tell you, give you a little bit idea. When we talk about corporate restructuring, to be very honest, when your business is in little bit hot water, then we talk about corporate restructuring. Because when everything is fine, then obviously there's no need to go for restructuring. So normally we go for corporate restructuring when business is in little bit hot water. We'll see. So why do and one more thing, while discussing this corporate restructuring, in this corporate restructuring topic, to be very honest, you will see number of double entries as well, debit, credit, SOFP, P&L, these things. And in corporate restructuring, basically, we will be discussing reporting areas as well. Because most of the time which I have seen in the past paper, whenever the corporate restructuring question comes, examiner normally asks the students prepare SOFP, and sometimes even he has asked calculate EPS, gearing ratios and all these things. So don't worry, we will discuss past paper obviously as well. After dividend policy, we'll go for valuation of debt, including bond duration. Valuation of debt including bond duration is again very important area. Bond duration, we call it macula duration as well. In the past, this bond duration topic was once examined for 17 marks as well. Okay. Then we'll be discussing all relevant articles, obviously. All relevant articles. All the relevant articles we'll be discussing. Because normally you can say almost in every attempt, I would say, if not in every attempt, otherwise in every second attempt, one article normally AFM examiner he examines. So we'll be discussing all the relevant articles of relating of course AFM. And then finally there is ETC, etc. If you have any other little things, we'll be discussing those as well. For example, ratio analysis. We will discuss even ratio analysis in AFM also. So this is the sequence which I'm going to follow normally. Okay. In AFM, what about which kit we are going to follow? What about the book? In AFM, dear students, you need to follow my compiled books. I have compiled two books, book 1 and book 2. In book 1 and book 2, you have all the past papers. Okay. So no need to buy any kit. No need to even download the past paper. Everything is included in my book 1 and 2. Okay. A very important point is you need to have, obviously, you need to maintain a proper register, each and everything. And wherever you get a stuck, you can always ask the question on WhatsApp. Okay. what we are doing today, even before starting cost of capital, let me first discuss few basic things with you. Basic, I would say, financial management discussion with you. And after discussing that basic area, then slowly and gradually we will start our first topic, that is cost of capital. But first we'll be discussing little bit, you can say, basics of financial management, that what is the primary objective of financial management and all these things. And that little bit discussion will give you a really good idea. And one more thing, dear students, you have to be really good in theory. If you're not good in theory, so obviously you will be having a problem. For example, look at this report writing. So we will discuss properly how to write a report, and I will teach you two ways of writing the report. Number one, you have solved the question properly, and after that, how to write a report. Number two, which is more interesting, that if someone is not able to complete the part A of calculation area, but still, even though you have not completed part A, but still you will be able to write the report correctly. So, how to write the report correctly, even I have not completed part A. So, I'll teach you that skill as well. And another thing is, there are few topics, they normally come in your AFM, and they come in a very set pattern. For example, investment appraisal. Whenever investment appraisal question comes in AFM, it all normally examiner asks 6 to 7 marks question relating to assumptions. So whenever investment appraisal topic comes, it comes with assumptions. Your examiner normally asks assumptions of investment appraisal, and the same another topic is BSOP, Black-Scholes option pricing model. So normally examiner is going to give you 4 to 5 marks for the BSOP assumptions as well. So it means that if any one of us is having a good command how to write the investment appraisal assumptions as well as Black-Scholes option pricing model assumptions, obviously chances of passing this AFM becomes easy. If you have a really good command on articles, number one. Second, you can write a report. Number three, if you are really good how to get these 20 professional marks, so obviously your passing chances, they become very easy. Your passing chances are more and more if you can get hold of on these things which I've just discussed. So let us start the basic of financial management. Okay, dear student, let us discuss few basic things. Then slowly and gradually we are going to we will start cost of capital. Just a minute, give me a second. Okay, that's fine. Financial management, number one is, let us discuss what is the primary financial management objective. The primary objective of financial management is to maximize the wealth of shareholder. The primary objective of financial management is primary objective of financial management is to maximize shareholders' wealth. To maximize shareholders' wealth. Primary objective of financial management is to maximize shareholders' wealth. Now, very important one. You have to listen the question carefully, and then you have to listen the answer more than carefully. Okay. What did I say? What is the primary objective of financial management? The primary objective of financial management is to maximize the shareholders' wealth. Okay. Now the question is, how do we measure wealth of shareholders? Repeat. Let me repeat the question. Question is, how do we measure the wealth of shareholders? Now listen the answer. and listen it carefully. Pay attention on the words. The question is, how do we measure the wealth of shareholders? The answer is, it is universally acceptable. It is universally acceptable. By calculating market value of equity, we can measure the wealth of shareholders. Simply, if market value of equity is increasing, then shareholders' wealth will increase. If market value of equity is decrease, then obviously shareholders' wealth will decrease. So let me repeat, it is universally acceptable. By calculating market value of equity, we can measure the wealth of shareholders. If market value of equity is increasing, then shareholders' wealth will increase. And obviously, if market value of equity is decreasing, then shareholder wealth will decrease. Now the question is, how do we calculate market value of equity? Look at this. Market value of equity. How do we calculate? You have to take share capital. Just divide this share capital with par value. Obviously, when I'm going to divide share capital with par value, so logically I will get number of shares issued. Repeat. If we divide share capital with par value, it gives us issued number of shares. Multiply this with current share price. Let us multiply this with current share price. Okay. Share capital divided by par value results in issued shares, and just multiply this with current share price. You will get market value of equity. And obviously, if market value of equity is increasing, then shareholders' wealth will increase, and vice versa. This market value of equity is also a business value. This is also a business value. If I divide share capital with par value, I'll get issued shares. Current share price. For current share price, we use the symbol P0. For current share price, we use the symbol P0. So simply business value is equal to issued shares into P0. And this P0 symbol is just for current share price. Now listen, and listen carefully. Let's say someone is asking you why you have used the symbol P0 for current share price. Repeat. My question is, why we have used the symbol P0 for current share price? We could have used any other symbol. Why P0? The answer to this question is, P0 is a generic symbol in financial management, which is used for every instrument which has a market value. Repeat. P0 is a generic symbol in financial management, which is used for every instrument which has a market value. Now listen, let's say you have told to someone that P0 is a generic symbol, like in mathematics we have a generic symbol X and Y, and you just said to someone that P0 is a generic symbol which we use in financial management for everywhere where we have a where instrument is having the market value. So someone said, okay, prove it. Someone says, just prove it. Because I'm telling you, the P0 is a generic symbol in financial management which is used for every instrument which has a market value. And someone has told us, okay, prove this point. Let me give you a proof, okay? And all these things which I'm going to just tell you right now, we will study these in detail. Right now, I just want to prove one thing, that obviously P0 is a generic symbol in financial management which is used for every instrument which has a market value. Let me give you the proof of this thing. Number one is dividend valuation model. Dividend valuation model. In dividend valuation model, how do we calculate P naught? P naught is equal to D naught 1 plus G KE minus C. Dear student, this P naught is current share price. Obviously, ordinary shares. Obviously, which shares? Ordinary. So right now, P naught in dividend valuation model is representing current ordinary share price. It is the share price of ordinary shares. Okay. So this P naught is the current share price. Second. When we calculate cost of preference shares, KP is equal to, we say, D naught upon P naught. This P naught represents current preference share price. Current preference share price. Look at this, dear students. In dividend valuation model, P naught is representing current ordinary share price. And when we calculate KP, cost of preference shares, then we divide D naught upon P naught. This P naught is representing current preference share price. Third, in case of irredeemable bonds, in case of irredeemable bonds, when we calculate KD1 minus T by using the formula of irredeemable bond is this divided by P naught, obviously into 100. This P naught is representing current bond price. So look at this. Current share price, definitely X diff excluding dividend. Current preference share price, again X diff. P naught current bond price, X interest. Just see one thing. Look at this. I have used the P naught for ordinary shares in DVM. In this cost of preference shares formula, I've used the P naught for preference shares. In irredeemable bond formula, I've used P naught for bond price. So you can see one thing. This is the proof of P naught being a generic symbol in financial management, which is used for everything which has, for every instrument which has a market value. So we use P naught for ordinary shares, we use P naught for preference shares, we do use P naught for bonds as well. Okay, look at this. Where is that? So business value is equal to issued shares into P naught. Now let me tell you one more, very interesting. Right now we are not studying AFM. Actually, I'm just giving you a little bit foundation relating to financial management. So business value is equal to issued shares into P naught. Okay. Now let me tell you the benefit, and in fact I would say power of studying in a right direction. For example, if you're reading a question on business valuation, for example, and the first line of the question says A PLC is a listed company. As soon as you have read this line, A PLC is a listed company, so it should strike in your mind, it should trigger in your mind that in the question you will be having a P naught, because listed company P naught is available. Listed company does have a current share price. But if you are reading a question and question says A Limited is a private company does not have the P naught. Private company does not have the current share price because private company is not listed on the stock exchange. Which means that if I come across a question of a private company, I have to calculate P naught. But if I'm solving a question of a listed company, then I'll be given the P naught. So let me repeat. So what was the first question? The first question was how to calculate how to measure the wealth of the shareholder. The answer was by calculating market value of equity We can measure the wealth of shareholders. If market value of equity is increasing, then wealth of shareholder will increase. Then if market value of equity is decreasing, then obviously wealth will decrease. Now the question is, if market value of equity has increased, it means wealth has increased. But this is the end result. Definitely, there must be some financial as well as non-financial indicators which should point out towards maximization of shareholders' wealth. Repeat. Don't you think so? There must be financial and non-financial indicators which should point towards maximization of shareholders' wealth. So let us discuss what are those indicators. Indicators. We have seen this measure of shareholder wealth, value of equity, number of issued shares into ordinary share, current market price P0. To find P0 given in the question, if it is listed company, it will be given to you. For private company, we have to find out. Okay, just let us discuss financial indicators pointing towards maximizing shareholders' wealth. Like if EPS is increasing, then obviously it is the indicator that wealth of shareholders will increase. Dividend per share is increasing, it is good indicator if it is increasing. Return on capital employed, if it increase, is obviously if it is increasing, then it is pointing towards maximization of shareholders' wealth. Return on shareholder capital. Return on shareholder capital, we also say return on equity. How do we calculate return on equity? Simply PAT divided by total equity gives you return on equity. Obviously, return on equity is increasing, so we'll say financially business is going in the right direction. PAT is increasing, it means again it is a good financial indicator pointing towards maximization of shareholders' wealth. The same applies for revenue. If all the financial indicators are increasing, then increase in these financial indicators obviously represent that sooner or later wealth of the shareholders will increase. But we have some non-financial indicators as well. Market share. Obviously, if market share is increasing, it is pointing towards maximization of shareholders' wealth. Customer satisfaction. Customer satisfaction means repeat business from customers. If you're getting a repeat business from customers, it means you have achieved the customer satisfaction. If you are getting a repeat business from your customers, it means you have achieved the customer satisfaction. Let me give you the example of this customer satisfaction. I have heard people by saying this, if you just use once Apple iPhone, just use once, after using Apple iPhone, people say, after using Apple iPhone, you will not like any other smartphone at all. If it is true, because I personally don't have that experience, because I don't have iPhone right now. But if it is true that after using iPhone you will not like to use any other smartphone, if it is true, then we'll say obviously Apple has achieved the customer satisfaction. Quality measures. Obviously quality speaks. Quality measures. Quality speaks. There's no alternative of quality. And quality does not come cheap, let me tell you. Quality does have its cost. So obviously there's so many automobile cars, like we have BMW and there are other cars as well. Why people are willing to pay so much for the car to BMW? Obviously because of the quality measures. So we have financial as well as non-financial indicators which are pointing towards maximization of shareholders' wealth. The above are all key performance indicators that need to be measured and reviewed on a regular basis by BOD. So, dear student, let me sum up simply. The basic objective of financial management is to maximize the wealth of shareholders. How do we measure the wealth of shareholders? By calculating market value equity, you can measure the wealth of shareholders. If market value equity is increasing, then wealth of the shareholder will increase. And if market value equity is decreasing, then wealth of shareholder will decrease. So there are financial and non-financial indicators which point towards maximization of shareholders' wealth. Obviously, financial indicators are increasing, like EPS is increasing, DPS is increasing. Then obviously wealth of your shareholders will increase. The same is on non-financial indicators. If market share is increasing, customer satisfaction is increasing, quality of your product is excellent, and day by day your quality of the product is increasing. So it means sooner or later, definitely shareholders' wealth will be maximized, because financial indicators, they are on a right track, and non-financial indicators, they are on a right track as well. So all these are key performance indicators, and it is the responsibility of BOD to review these key performance indicators. Okay. Now we have external factors affecting V. We represent market value equity with V. Market value of equity. V simply means market value equity. Okay. The board cannot control all aspects that affects V and or P naught. One of the major factors is macroeconomic variables. Actually, your BOD cannot control all aspects which affect VE and or P naught. So major factors, one of the major factors is macroeconomic variable. Now the question is, if my BOD does not control macroeconomic variables, then what is the benefit of having the knowledge of those macroeconomic variables which my BOD does not control? There is a benefit. There is a benefit. I'll tell you what is the benefit of knowing or having knowledge of macroeconomic variables. Wait for that. Let us first discuss macroeconomic variables. Actually, we have 5 macroeconomic variables, and the 6th one is the political risk. Let us discuss first interest rate. If they fall, stimulate demand and revenue. It is possible that if interest rate is decreased, that revenue of your business will increase. Let me give you an example. Assuming your product is so expensive, in order to buy your product, people need financing. So obviously, if interest rate has decreased, then customer will be willing to take the loan to buy your product. So obviously your demand will rise. The second benefit is lower the cost of debt and improve profits. Obviously, if the interest rate falls, then cost of debt will fall. For example, in the past, organization took the loan and they used to pay 10% on that. But nowadays, if the interest rate is only 5%, so definitely if they take loan today, and they will be just paying 5%. So lower cost of debt improves your profitability. Investors switch to share market for better returns. It is also possible. Then investor may sell their investment in debentures, investment in bonds, and to go for share rather. Go to the stocks and to simply switch their investment from debenture to the ordinary shares. Obviously, if investors, those they have invested in debentures, they are not getting a good return due to fall in the interest rate. So they will switch their investment from, you can say, bond to shares. This is interest rate. If they fall, this is number one. The second, if inflation rate inflation rates if it rises. Cost rise causing the drop in profit, yes. When inflation increases, cost will increase and profit will reduce. Cause interest rate to rise, yes. If your inflation is increasing, your interest rate will rise. And the last one is the devalue of the home currency, definitely. If inflation rate is increasing, then your home currency will devalue. Third, foreign exchange rates, if it rises, reduce cash receipt for exporters. Listen and listen carefully. If the local currency becomes strengthened strong against the, let's say, dollar. If your local currency, your domestic currency becomes stronger against the dollar, just assuming, and let's say you were about to receive $5,000. When you are going to convert those $5,000 into your currency, then you will be having obviously less amount. Why less amount? Because your currency has become strengthened against the dollar. So let me tell you one thing. In case of receipts, if your currency is becoming strong, in case of receipt, in case of export, if your local currency, home currency becoming strong, then you will be facing a loss on exports, because it will reduce your receipts of exports, lower the cost for imports. There will be only one benefit. The benefit is going to be you will bear lower cost for importers. Discouraging exporting, yes. If your local currency is becoming strong and strong day by day, then it does discourage export, because when you will convert dollar into your currency, you will be having a very less number of your own currency if your currency is becoming strong. Gross domestic product. Actually, gross domestic product means the final monetary value of all the finished goods manufactured in XYZ country and final monetary value of all the services rendered. Gross domestic product means the final monetary value of all the goods manufactured in 1 year in a country and final monetary value of services which are rendered in 1 year in a country. Gross domestic product, if it falls, reduce demand and revenue, they will follow. If GDP is decreasing, then obviously demand and revenue of the business will definitely fall. Cause interest rate to fall to stimulate what? Demand. It causes interest rate to fall so that demand should stimulate. If GDP is decreasing, then it causes interest rate to fall, so demand should increase. Reduces demand and revenue, causes interest rate to fall. General taxation, if it rises, damage company profit, obviously profitability will reduce, not encouraging investment by companies. More saving from tax effect of the tax, there is only one benefit, that if tax rate has increased, you will be getting a higher tax saving from capital allowances. Other than that, there is no benefit. So you can see there are 5 economic variables. One is interest rate, second is inflation, third is foreign exchange, the fourth one is GDP, and the last one is general taxation. There is a 6th factor as well, which is political risk. Obviously, if your country is having a political stability, it will have a really good impact on your business. If in your country or in any country, if there is political unrest, obviously political unrest is not going to have a good impact on the businesses. So altogether, there are 5 economic variables plus 1 political factor. I just want to tell you one thing. There are 5 economic variables, and obviously there is 1 political factor. Obviously, in any country, if there is political stability, it will have a positive impact on all the businesses, and if there's political instability in politics will have a bad impact on all the businesses. So actually we have 5 economic variable, 1 political factor. I want to say something. All of these 5 economic variable and 1 political factor, all of these are basically risks for business. 5 economic variables and 1 political factor, all of these are risk for business. Now listen and listen carefully. Definitely, each industry is not going to suffer at the same, will not suffer the same amount of loss due to these economic variables and political factor. For example, if there is unrest in the country, then definitely it will impact more on airline business as compared to supermarket, chain of supermarket. So you can say if there's a political unrest, it will affect more airline business than a chain of supermarket. But having said this, let me tell you one thing. All of these 5 economic variable and 1 political factor, all of these altogether 6 things are risk for business. Okay. And if 5 economic variable and 1 political factor, they are risk for the business, then there should be a measure of business risk. And measure of business risk be represented with beta asset. We will study this in cost of capital, don't worry. Beta asset is actually a measure of business risk. It's a measure of beta asset is a measure of business risk. And what are the factors which they contribute in business risk? We have 5 economic variable, 1 political factor. All of these are the example of business risk. And beta asset is a measure of business risk. So far, dear student, you should be having a really good understanding that there are 5 economic variable, 1 political factor, which will affect your market value equity, and they are also beyond the control of the directors as well. And all of these 5 economic variable and 1 political factor, they are risk for the business, and measure of the business risk is beta asset. Okay. Agency problem. Basically, agency problem arises when shareholders, they believe that due to decisions of BOD, wealth of shareholders, it has damaged. Repeat. Agency problem arises when shareholders, they believe that BOD's decisions have decreased their wealth. Then agency problem arises. Shareholders are the owners of the company and expect their directors' agent to take decisions to maximize shareholders' wealth. The agency problem occurs when directors take decisions that do not lead to maximizing shareholders' wealth. So simply agency problem will arise when shareholders, they think that BOD decisions have not increased their wealth. Now the question is, what are those decisions which shareholders, they believe those decisions have damaged the wealth of shareholders? So what are those decisions? And the second question is, what are the directors? Do they take such decisions deliberately, intentionally, or unintentionally? Repeat. Agency problem arises when shareholders, they think that director decisions do not lead to maximizing shareholders' wealth. Okay. Now the question is, what are those decisions of the BOD which do not lead to increase the wealth of shareholders? Second, do they make such decisions intentionally or unintentionally? And third, do we have any solution for those decisions? So listen, students. What are those decisions which which will damage the wealth of shareholders, and directors, do they make such decisions intentionally or unintentionally? So if you really want to know what are the decisions BOD takes which do not lead to the maximization of shareholders' wealth, do they make such decisions intentionally, unintentionally? We will discuss this in the next class, and after discussing that area, we will go for cost of capital. We'll go for cost of capital. In this first class, I have given you the flavor that we are not going to study only numerics. If in AFM we will be studying only numerics, so definitely you will be in then at the end of the day in deep problems. In AFM, you have to be really good in calculation as well as your theoretical area must be very, very strong. And let me tell you just few things that I personally teach, Alhamdulillah, F5, F6, F7, F9, SBR, ATX, AFM. And in all of these 7 papers which I Alhamdulillah teach, in every paper, Alhamdulillah, I have produced position holders. In F5, I have produced position holders. In F7, in F6, in F9, I have produced nationwide as well as one worldwide position holder as well. Same in AFM. In AFM also, Alhamdulillah, I have produced nationwide as well as worldwide position in AFM. I do have a position in SBR as well, and Alhamdulillah, I have produced number of position holders in ATX as well. By just giving you this information means if you join my online courses, to be very honest, dear students, you will be in safe hands. Whenever you are going to ask question, you will be getting the proper reply. For more information, you can always contact ASA admin. The number of ASA admin is 0092. That is our code. After that, 333366214. This is our ASA WhatsApp number. You can always contact us for any other information. Inshallah, my admin will be available. Even I'll be available. So thank you very much watching this lecture. I really want to see you in my course. Thanks a lot.